Hello and welcome to the weekly edition of Your Trades with me, Snehisha, and with me is Priyanka Uppal. Let's take you through Friday's moves as well as what the markets did over the course of the week. And on Friday also, rather stable moves coming in from the Nifty and broader markets as well. So they have panned out well in Friday's intraday trading session. But when we take a look at
do this rally, relief rally has more legs. Let's understand this. To help us navigate the direction for market for coming week now, we have Rajesh Palvia joining in to give us more on technical front. Good afternoon, welcome to ET Now. What do you make the markets from here? Because what we saw that from derivatives data, 21,900 clearly a good support on Nifty. Market breadth was bullish. Can we expect a relief rally further also, or consolidation can also not be ruled out here?
Good afternoon, Priyanka. So, in this week, we have seen that both the indices have given a breakdown of their important support area. Nifty briefly went below to 50-day moving average, and Bank Nifty moved below to 100-day moving average. But after a strong recovery in last couple of trading sessions, again, both the indices are now managed to close above 50-day moving average. So that's a positive sign on the near-term structure. Till this 50-day moving average is defined by both the indices, I think trend is likely to remain on the bullish side for near term. If we look at the call put concentration, still 22,000 is still having call concentration area, but on the other hand, put writers are also aggressive at 21,900, 22,000 strike. So if at all Nifty able to hold 22,000 level for next one or two trading sessions, then there would be another round of short covering we can see in the Nifty, and possible upside target we can see towards 22,250 to 22,300 in the continuation of this pullback. So at this moment, stance is on the bullish side. Buy on dip should be your strategy. 21,900 should be one can keep as a stop loss. For Bank Nifty, the stop loss one can keep at around 46,500. That's the major put-based concentration at this moment. So I think that level needs to keep as a stop loss to hold long position in Bank Nifty. Some more recovery we can expect in coming week towards the expiry of March series, and possible target for Bank Nifty we can see towards 47,200 on the high side.
Alright, Rajesh, thanks for sharing your views on that. This is Snehi also joining in. Help us understand the moves that we've been seeing in the IT index, right? Because Nifty IT has hit a 2-month low this week. It's a top sectoral loser for the week, 6% down. And help us understand now. I understand that this is largely because of Accenture's guidance being trimmed. They've trimmed their outlook going ahead, and that has had an impact on Indian IT as well. But tell us if this is a temporary blip coming in for IT, or is there can we expect some more downfall coming in for this sector? Also help us understand, if one has to navigate this sector, what would the strategy be? Because surprisingly, Coforge and Infosys have been the biggest losers this week. Coforge is mid-cap IT, Infosys large-cap IT. So, what would be your strategy when it comes to trading this index? Help us understand.
Yeah, definitely some downtick is there in Nifty IT, and if we look at the near-term structure, this is the fourth day where we are seeing supply pressure in Nifty. Now Nifty IT is trading near to its 100-day moving average, which is placed at around 35,100 kind of zone. If at all Nifty IT slips below to 35,000 level, 35,100 level, yes, we may see further more pressure towards 34,700, even 34,600 kind of zone on the downside. But if we look at the constituent of Nifty IT, I think some of the stocks like TCS, that is holding the ground on the longer term time frame, though there was some supply pressure in near term basis, but still if we analyze on the longer term setup, still the stock is holding the support on the longer term time frame, and I think that support is placed at around 38.50. So till TCS is holding these level, I think there is a high possibility that TCS may again show some buying interest in decline, and we may see again pullback action. Even another stock that is looking bullish on IT pack, that is HCL Tech. Again in this correction, stock is still holding its breakout level on the longer term time frame. Stock is bullish. though there was some corrective move, but we believe that till stock is holding about 1510, 1500 kind of zone, I think again there would be buying interest may come around those levels, and some pullback action we can see in HCL Tech also. So I think next couple of days are very important for Nifty IT. One needs to close it, watch it very closely, whether we able to hold 100-day moving average support area at 31,100 or not. If hold, then one can try to buy some of the stocks as we mentioned. TCS and HCL Tech are our preferred choice at this moment.
So you would go for a wait and watch approach, will watch the levels and then make a decision for buying in IT. But what about the sectors which have shown a stellar move this week, Rajesh? Auto sector clearly, stocks which are economy facing like capital goods, industrials, which recovered very well, and that to be from broader markets, beaten down names like real estate pack. How are these sectors going to perform? What would be your pick if it lies from these spaces only?
The Nifty Auto clearly is in bullish trend. Most of the stocks are still holding the ground, and long-term structure for most of the stocks, be it Maruti, Bajaj Auto, Mahindra and Mahindra, TVS Motor, all these stocks are almost trading near to their all-time high trajectory. Even if we look, if we take the view from Nifty Auto Index, it's also almost trading near to its all-time high trajectory. So overall structure for automobile index is in the bullish trajectory only. Nifty Auto is comfortably holding about the 50-day moving average in this decline also. So that's clearly giving us sign that wherever market will show any kind of pullback action, there would be always outperformance from the auto stocks. So our preferred choice at this moment from automobile is Maruti is our preferred choice. Maruti, we can see another round of rally, and the possible target on the hashtag we can see towards 12,600 to 12,800 in the continuation of this uptrend. One can buy with stop loss of 12,100. The second stock that we like from two-wheeler space, that is Bajaj Auto. Almost stock is trading near to its all-time trajectory, and we expect that this momentum can continue further. 9,300 is the near-term target for the stock. One can look to buy this stock with stop loss of 8,750. And the third stock that we like is Mahindra and Mahindra. Though there was some corrective move in last couple of weeks, but as we look at the longer term time frame, stock is holding the ground on the long term chart. So we expect that Mahindra and Mahindra can also start recovering from the current level. So M&M can also be a buy with stop loss of 1830. Upside target we can see towards 1950 to 2000 kind of level.
Rajesh, thanks so much for your views coming in on the auto sector. But Rajesh and viewers, both stay tuned with us as we carry this discussion ahead on the week that was and the week that's about to come into the next segment. We'll slip into a short break. You stay tuned.
Welcome back. You're watching Your Trades. Rajesh is with us. Rajesh, tell us more on the moves that you anticipate on PSU space, because we did see some recovery coming in majorly from the energy basket, and of course some PSU banks also recovered. What do you make from here? How would you trade in this space?
Actually, we've seen very strong pullback in Nifty PSE index, and Nifty PSE almost recovered around 2.5% to 3% in this pullback. Looking at over structure, most of the PSU stocks, PSE stocks were under oversold trajectory, and most of the stocks have shown very good short covering action in this pullback. So we believe that PSU basket can continue furthermore upside as the significant corrective move is already done, and most of the PSU stocks have taken the support from their important support area of 50-day or 100-day moving average, and that is clearly showing that that near-term trend is intact for all these stocks, and we can see furthermore upside momentum from PSU banking space. We like Canara Bank. Very strong pullback action in last couple of trading sessions, and the kind of buying interest which we are seeing clearly shows that if stocks now holds above 555 level, then possible upside target we can see towards 590 to 600. From PSE basket, we like Bharat, BHEL, then we like other stocks like NTPC. That stocks are also looking promising, and I think most of the stocks are now ready to show further more recovery. So one can look to buy these stocks with approx 2% of stop loss to buy at the current market price. And I think we believe that till Nifty now holding about 22,000 level, some more recovery we are going to witness in whole PSU basket going forward. So one can add these stocks in their portfolio. To play this up to of PSE basket, one can look to buy at CPSE ETF also. That is also looking very promising. 50-day moving average is also protected by CPSE ETF. So I think we are projecting target for CPSE ETF around 85. Keep your stop loss at 76 to buy CPSE ETF.
Thanks for sharing that with us. But will that also help our viewers with the picks that have made it to your radar, the stocks that you're picking out for next week's action? What are you bullish on?
So we are now moving towards the March series expiry, and towards the expiry, a lot of stocks are now trading near to all-time high trajectory in this kind of market also. Pidilite is our first choice to buy. Almost stock is trading at all-time high trajectory. Multiple supply zone breakout is already visible on the weekly as well as on the daily chart. A long built up throughout the series. So we expect Pidilite can extend its up move towards expiry. 3015 is the target where we are expecting. One can buy with stop loss of 2920. The second stock that we like is the JSW Energy. Now stock has shown recovery since last couple of trading session, and now stock is approaching towards its multiple supply zone. Almost stock is trading near to its all-time high trajectory. We believe that the kind of structure we have on the longer term time frame, JSW Energy is having potential to cross its all-time high trajectory. We are projecting target towards 545, so one can buy this stock with stop loss of 506. And the third stock that we like is Indus Tower. Stock has shown very smart recovery in last half an hour of trade. And looking at the breakout on the weekly chart, we believe that this momentum can exceed further to 95 is the near-term target where we are projecting. Keep your stop loss at around 266.
This saw a 10% move today. The big open interest also happens to be here. Thanks very much, Rajesh, for the views and the stock recommendations on this show today. All right, let's move forward. And we did speak